Good afternoon to all of you. On behalf of the Accounting Standards Board, it's my privilege to welcome you to the 22nd webinar of our Brain Gain Expertise series. Today's session focuses on a topic of significant practical relevance: leases simplified, recognition, measurement, and presentation under Ind AS 116. Lease accounting occupies a critical place in financial reporting as it directly affects an entity's balance sheet structure, key financial ratios, and performance metrics.
You will make your notes.
Ind AS 116 introduced a fundamental shift from an earlier lease accounting model by bringing most leases on the balance sheet of lessees through the recognition of right to use assets and corresponding lease liabilities. While the standard enhances transparency and comparability, its application involves considerable judgment, particularly in areas such as lead identification, measurement of lease liabilities, discount rates, and subsequent presentation. Through today's webinar, we aim to simplify the core principles of Ind AS 116 and address the practical challenges commonly encountered by preparers and auditors. The discussion will focus on translating the standards conceptual framework into clear and consistent accounting outcomes across various leasing, accounting, and industries. We are confident that the session will provide participants with valuable clarity, practical insights, and actionable takeaways that can be effectively applied in their professional engagements. Thank you for joining us, and we look forward to an engaging and insightful deliberation. We are privileged to extend a very warm welcome to our esteemed speaker for today's session, CA Yagnesh Desai sir. Before we move into the technical discussion, it's my pleasure to introduce the moderator for today's webinar, CA Ghansham Fogla. He is a chartered accountant and CFA Level 3 candidate with over 7 years of experience across financial planning and analysis, M&A, deal pricing, budgeting, forecasting, and advanced financial modeling, including scenario and sensitivity analysis. He is an experienced business analyst leader with a strong track record in driving operational efficiency through automation and process optimization initiatives, earning multiple recognitions for innovation-led impact. He is also a finance educator and practitioner with a keen interest in emerging technologies, actively focused on leveraging AI to develop practical, scalable solutions for financial professionals and chartered accountants in practice. Over to you, sir.
Thank you, Rahul, for the great introduction about myself and the topic. Good afternoon, everyone, and welcome to today's session. It is truly an honor for me to introduce a speaker who needs very little introduction in the professional fraternity. Our speaker today, CEO Yagnesh Desai, brings with him an extraordinary journey of 42 years
Reading from a computer.
Marked by continuous learning, teaching, and contribution to the profession. A chartered accountant and CPA has been in active practice since 1983 and has extensive experience in audit, taxation, and financial reporting. What makes his sessions especially valuable is his ability to simplify complex accounting standards into practical real-life applications. For a standard like Ind AS 116 leases, which has transformed balance sheets, key ratios, and audit approaches, professionals often face challenges in interpretation and implementation. His long-standing association with Ind AS, IFRS training, and the Accounting Standard Board of ICI gives him a unique vantage point, combining the intent of the standard with ground-level execution issues. He has already delivered over 1,800 sessions across India and internationally, trained thousands of professionals, and continues to be associated with ICI as a co-opted member of the Accounting Standard Board for more than 15 years. Further, he has also delivered motivational speeches at national convention, student conferences, and trained students on accounting standards. His contribution was recognized when he was awarded the Icon of Mumbai City by the Times Group. Furthermore, he has also completed and passed sustainability report course. Apart from this, he has interest in comparing music shows and took part in various half marathons. We are truly fortunate to have him guide us through today's topic. As we know, going through the entire topic is difficult within a couple of hours. So without taking any more time, I hand over the session to Yagnesh Desai, sir.
Namaskar, everybody. Ghanshyam, am I audible to you?
Yes, you are, sir.
Yes. Thank you very much, Ghanshyam, and thank you very much, Rahul. Ghanshyam, thank you very much for the kind words. And I'm grateful to the ASB chairman and vice chairman of SB and the team for giving me an opportunity to dwell on the Ind AS 116, which is supposed to be the very difficult task, very difficult standard. And the more so is going to be challenging for me because I have to conclude in about less than 2 hours time. But no matter, sir, I understand and I have accepted the challenge, and I'll strive to make it more easy as early as possible. I think, Rahul Sahab, you've given me a right to share. Can I share my PPT now?
Yes, sir, you can.
Yes. Okay. Slide two from the beginning. So friends, Rahul Bhai also has briefly, though in 2 to 3 minutes, he also narrated very crux of this standard, that this standard is totally changed from the perspective of the lessees. From the perspective of the lessees, the standard has been changed a lot. The standard has not been changed from the perspective of the lessor. The lessor still talks in terms of operating lease and finance lease. However, from the perspective of the lessee under 116, the lessee does not talk or treat any assets as the operating or the finance lease. 7 except short-term leases and low-value assets. We'll see what these short-term leases and low-value assets are. So barring these two leases, the lessee under certain circumstances has to recognize the right of use assets and the lease obligation, lease payments. You recollect in good old days, as per the Ind AS 11, as per Ind AS 17, we had two types of leases: A, finance lease, and B, operating lease. Finance lease was the one where the title, risk, and reward was virtually transferred to the lessee. But I want to talk more about the accounting treatment in the books of the lessee. Lessee under the finance lease used to recognize the assets under finance lease, and at the same time the lease payments reduced to the present value using the incremental borrowing rate or the implicit rate of the lessee in a lease. So the accounting entry passed by the lessee under the erstwhile Ind AS 17 was as under: debit assets under finance lease and credit lease obligation. My dear friends, virtually the same thing is done by lessee under the new model of 116 with little change. What is changes? The change is, instead of fixed assets under finance lease, the nomenclature is right of use asset. Right of use asset could be land, could be building, could be vehicle, could be laptops, could be computers, could be machinery, could be anything. So once the lease is qualified to be, once a contract is qualified to be a lease and subject to certain conditions, I'll tell you what these conditions are. These conditions are very important. If a contract is established as a lease subject to certain conditions, then the lessee recognizes A, the present value of the lease payments. These lease payments are discounted using the incremental borrowing rates. Friends, I have given an example of how to compute the incremental borrowing rates. At the same time, how to measure the lessee's implicit rate in a lease. So the entry passed initially, the recognition by the lessee is as under: initially he recognized the present value of the lease payments using the incremental borrowing rate or the implement rate, and concurrently, simultaneously, he recognizes the right of use asset. Later on, the right of use asset is subsequently measured at the cost model unless for that particular class of asset, the Ind AS 16 follows the revaluation model. For example, the ROU asset is ROU property, ROU plant and machinery, or say ROU building, and the entity follows the revaluation model for the building per Ind AS 16. So in that case, the lessee will have to follow the revaluation model for the subsequent measurement. But initially, as I mentioned to you, the first initial entry is recognition of the lease payments, and then the same amount you recognize the ROU asset. Besides, however, there are two exemptions, and these exemptions are voluntary. It's left to the lessee whether the lessee wants to claim this exemption or not by virtue of para 6 of Ind AS 16, Ind AS 116. These exemptions are short-term leases and low-value leases. But I mentioned to you that conditions apply. If a contract fulfills certain conditions, only then lessee can recognize the A, present value of the lease payments, and B, concurrently for the same amount, the ROU set. Now, these are the standards which are not covered by Ind AS 16, Ind AS 116, just for your information. Now, why was this standard introduced? I always say that Ind AS IFRS has got a lot to interpret, and they have interpreted a lot. And if I may say so in Hindi, rishte wahi soch nahi. The transaction is same, definition is same, but the interpretation have undergone a huge change, a paradigm changes. The way we look at a certain transaction makes a whole and a hell of a difference. The recent example is Ind AS 116 from the perspective of the lessee. We have all known all these there that asset is a resource controlled by an entity, and from which the future economic benefit will flow to the entity. So the standard setters thought that since the lessee is in control of the assets, can control the asset during the lease period, no matter the lease period may be much lesser than the useful life, but at least for the given lease periods, the lessee has control over the assets. So then they thought that why don't you apply this model? And hence they have applied the new model from the perspective of the lessee only. Mind you well, I must tell you, and I must repeat and reiterate, that this standard has not been changed from the perspective of the lessor. Meaning, lessor still has to classify the lease either as the finance lease or as per the operating lease. And we all know that finance lease is one which virtually substantially transfer all the rights and obligations of the underlying assets to the lessee. Correct? And the one which is not a finance lease is an operating lease. So in that case, so we'll not discuss much about from the perspective of the lessor, because that is all known and it is going to be much the same. What we are interested in, following questions. What are those conditions which will make a contract to qualify as a lease under 116? What are the payments which will be forming part of the lease payments? I'm asking this question because the lease payments are discounted to the present value. Say the lease the present value of the lease discount is lease payments is 1,10,000 initially. So the entry will be debit ROU asset and credit the lease payments. Now, if there is a change in the lease payments, it's going to impact the ROU assets measurement. Recognition will be there, but the measurement will differ depending on what comprise of the lease payments. Lease payments can be of two types: A, fixed; B, variable. We'll see that what is the accounting treatment for the lease payments which are variable, which are not fixed. Are we supposed to recognize them or not? And if yes, what is the treatment? If not, what is the treatment? So this is where I want to see that what are those conditions, right, sir? Fine. So requires the lessee to recognize assets and liabilities for all the leases with a term of more than 12 months unless the underlying asset is of low value. The sentence looks one simple sentence but tells three things at a time. That there has to be a contract, and that those contract where the term of the contract is more than 12 months, okay, then only the lessee should recognize the assets and liability. That means if the term is 12 months or less, then lessee should not recognize, is not required to recognize the ROU asset and the lease liabilities. In that case, what he should do? In that case, the lessee should expense out the lease payments and not to capitalize, not to recognize ROU, not to recognize the lease payments obligations at the present value. At the same time, if the asset is of a low value, the lessee is not supposed to recognize the ROU asset and the liabilities. So these are two exemptions, but these are not mandatory. It is the word used in the standard paragraph 6 is may. For all other leases, the lessee recognizes the right to use asset representing the right to use the underlying asset and the lease liability representing the obligation to make the lease payments. Short-term lease and low-value lease are not recognized under Ind AS 116 in terms of ROU or the lease payments. What is the accounting treatment of these lease payments? Accounting treatment of this lease payment is to expense out these lease payments as and when they occur. I'm not going to dwell much on the lesser perspective because it's much the same. Here is an example that lease of low value and lease of the short term, and later on we'll go to the what makes a particular contract to be qualified as lease under 116, wherein the lessee has to recognize A, ROU asset, and B, lease obligations, obviously at present value. I keep on repeating this because it's very fundamental that the lease payment have to be measured at the present value using IBR, incremental borrowing rate, or the rate implicit in the lease. So low value lease is exemption. Standard does not specify the monetary amount. Very important. It is left to the entity. It is left to the materiality of the entity. But then entity has to define what is the materiality from the perspective of even 116 as well. For a very big metro railway corporation, the materiality level for the low value lease has been fixed at 1 crore rupees. This may not be true for other entities. Okay, but there is one catch. An item may be low asset value as very low value asset as per the accounting policies laid down by the entity. But if it asset is dependent on or highly related to any other asset, then despite being a low value asset, it does not qualify to be a low value asset. Meaning, the lease payments for these assets are not to be expensed out but to be capitalized. An entity will recognize the ROU asset and the lease payments. For which low value assets? The assets which are either dependent or interrelated with any other assets. Obviously, which are not the low value assets. Very important, this can be applied on lease by lease. So item by item, you can see. So one, if you set up the threshold limit of the low value asset, and there is a contract of about say, and the low value asset, the threshold laid down for low value asset is 50,000 rupees. Okay, and there is a contract for laptops. So each one is 40,000, and this contract is for 10 laptops. So the total contract value is 4 lakhs. The question arises, should I consider 4 lakhs rupees in consideration, take 4 lakhs rupees to determine the low value asset exemption, or 40,000 per laptop? The answer is 40,000 per laptop. That's what they mean to say lease by lease. So regardless of the fact that the total contract for the 10 laptops is 4 lakhs rupees, which is much above the threshold limit of 40,000 rupees, entity can still claim the exemption. That's what he mean to say by lease, item by item. All right, now let's do what do you mean by short-term leases. Applies to leases with a lease term of 12 months or less. It's not more than 12 months. It's not just less than 12 months, either 12 months or less. But if the contract has a purchase option or the right of renewal, then this lease does not qualify as a short-term exemption. In that case, the entity has to apply recognize the ROU asset and the lease obligation. When we talk about the low value asset, we talk about the asset by asset. Here we talk about the class of the underlying asset. Here the total value does not matter. Even if it is a 4 lakhs or 3 lakhs, 10 lakhs, it does not matter. But if the contract is 12 months or less, then it will be treated as a short-term lease, regardless of the monetary threshold limit. And that's why the criteria here is this class of underlying assets and not asset by asset. which is the case in the low value assets. Now, in both above cases, entity does not recognize the ROU assets or lease liabilities at the balance sheet. Recognize lease expenses on a straight line basis over the lease term or any other systematic. So entity does not recognize A, ROU asset, B, lease payments. These are the definitions, the same definition as earlier. Guaranteed residual value, operating lease. Now, this is a very important, very good example, sir. Allow me a minute. Okay. Gross investment in the lease is about net investment in lease and unrecognized finance income. I give you a small example. It's very easy to comprehend that there's a 7-year lease term. The lease payment paid in arrears is 500 per annum. Incremental borrowing rate is 10%. The gross investment in lease is 500 times 7 years is 3,500. Computer G, let's go to the example. And here is the example. Friends, guys, I say, friends, can you see the Excel sheet on your file, please? Can you guide me? Hello?
Yes.
Okay, thank you. Lease rentals are 500, incremental borrowing rate is economic life of the asset is 20 years, mind you well. The lease term is only 7 years. This lease would have been recognized as an operating lease under the erstwhile Ind AS 17. However, under Ind AS 116, this lease is considered to be the lease which is qualified as lease under 116. An entity has to recognize the ROU asset and the lease obligation. Friends, let me tell you those important conditions because of which the whole standard has been evolved and now revolving around. What is these conditions? What are these conditions? There has to be a contract. And obviously there has to be an underlying asset. Now the entity has this underlying asset has to be A, identified, and B, specified. The underlying asset has to be identified and specified. That means what, sir? The lessee has right of using these assets and during the entire throughout the lease term of 7 years. So 7 साल तक lessee को कोई छू नहीं कर सकता. Nobody will touch lessee stop lessee from using these assets as per his sweet wills. So virtually for this 7 years, it is his asset. But to differentiate between the other asset and this asset under the lease 116, the standard setters has smartly used the nomenclature right of use assets. Mind you, my dear friends, right to use asset is not an intangible asset. It is still a tangible asset. It is presented as a non-current assets on the asset side of the balance sheet under the main nomenclature non-current assets, property, plant and equipment. Either as a separate line item or club shoved off with the relevant item. But in that case, you have to give the disclosures. So here is example that 20 years economic life, but use the term is 7 years, no buyback option, no right to renew. Still, lessee has to recognize the ROC. Now let's go to the mechanism. I'm sure you all know because this is not the same as finance lease, even from the perspective of the lessor and the perspective of the lessee under the erstwhile Ind AS 17. So what I have done, I have plotted the lease payments. I found out the present value factor based on 10% incremental rate, and then I found the present value, sigma 2435. My 3,500, which I'm going to pay over a period of 7 years, is the gross investment in the lease. 2435 is the net investment in the lease at 1,065. Make the difference between 3,500 and 2435 is the unrecognized financial income. 2435 is the net investment in the lease. What happens to 2435? But before that, let's go to the first entry. The very first entry which lessee passes is as under debit ROU asset computer 2435 and credit lease obligations, lease payments. 2435, to repeat and reiterate, is the present value of the minimum lease payment. All lease payments are paid in arrears. Meaning, They are paid at the end of the term. Had this lease rentals been paid in advance, had this lease rentals been paid in advance, I would have reduced the lease term to 6 years, and I would not have recognized the, I would not have discounted the very first payment which I made on the day one. Okay, that is the difference between the lease rent paid in advance and lease paid in arrears. Here, in this case, lease rents are paid at the end of the year 1, 2, 3, 4, 5, 6, and 7, and hence it is known as lease payment in arrears. Now, 2435 is my present value of the lease payments. I am increasing it up by 10%, which is my IBR. So my carrying value of the lease obligation goes up by 244, 2435 plus 244. And I'm paying lease obligations of 500 rupees. So by 500, my lease obligation will come down to give me the carrying amount of 2179 at the end of year 1. My dear friends, how can we miss out non-current and current assets classification? These are inseparable from the index. So when I have got 21C9 as a carrying value of the liability, I will classify 1896 as a non-current liability and classify 282 as my current liability. The answer is very simple. Don't think too much. See what's the carrying amount next and end of the next year. It is 1896. So this is my non-current liability. What is the difference between 2179 and 1896? It is 282. That's the current portion of the lease obligations. Don't forget, my dear friend, you have to classify lease obligations into current and non-current. When it comes to the ROU asset, you have to classify always as non-current assets. But let me tell you one thing. ROU may be disclosed. ROU need not necessarily be presented on the face of the balance sheet. It may be a part of the notes to accounts as a part of the property, plant, equipment notes. But as regards the lease obligations are concerned, I'm addressing presentation also because that is very vital. Lease obligations have to be presented on the face of the financial statements. A, non-current, B, current. Mind you well, these are to be not disclosed but to be present. So we got all this. Now technically, my dear friend, lease obligation is a financial asset, meaning there is an obligation to pay something back. So being a financial liability, it's a financial instrument. Sorry, I beg your pardon, is a financial instrument, is a financial liability. And being a financial liability, as per Ind AS 109, you have to measure it amortized cost. My dear friend, what I have done is the amortized cost. Right, sir? This produces the interest. And when it comes to the 2435, that is the opening carrying value of the lease ROU asset, what I have done, my term is 7 years. So I have to depreciate over a period of 10 years and no 7 years, and that is mostly the SLM, straight line method. So 2435, 348 is the annual depreciation. This gives me the closing carrying amount. Correct, sir? My dear friend, this 2435 is the initial amount of both A, the ROU asset, and B, the lease obligation. This need not be same throughout the tenure. If you see the carrying amount of the ROU asset, it becomes 2087 at the end of year 1. Whereas the carrying amount of the lease obligation at the end of year 1 is 2179. Both are different. Need not necessarily be same. But this this lease obligation becomes 0 at the end of year 7. Okay, sir? So this is what you have to pass an entry like this. So 243500, which is 7 years into 500 is gross investment. 2435 is a net investment, and the earned finance income is 1065. My dear friend, so under this scheme, under the new 116, the expenses which the lessee can and should recognize in the income statements are as under. A, depreciation on the ROU asset, B, interest on lease obligation. Technically, this is known as unwinding of discount. Unwinding of discount always, by default, reduces interest cost, oblique finance cost. So this will give you the complete picture as to what kind of expenses are recognized by the lessee under Ind AS 116, which is change totally. There's a paradigm change from the perspective of the lessee, that now he has to recognize A, ROU asset, which will be depreciated, B, lease obligation, which will be restated using the undiscounting of method, and the expenses to be recognized are A, depreciation, B, interest oblique finance cost. What used to be recognized earlier was 500 rupees per annum. Why? Because the useful life was 20 years. The lease term was 7 years. No renewal, no buyback. So erstwhile in day 17, this was considered as an operating lease. Hence, he was supposed to expense out these rentals. Now, if you go to see, they recognize expenses of 3,500 over a period of 7 years. Almost same thing in under 116. No difference. But where's the difference? In the initial years, as per Ind AS 116, the expenses are more as compared to Ind AS 17. The debit to P&L account is more as compared to operating lease in the initial stages, in the initial years. Later on is the reverse case. Later on, in the years after, in the years of 5th, 6th, and 6 years, 7 years, the charge in the P&L account as per 116 is lesser as compared to Ind AS 17. So technically, they call it front loading. Though the charge is same 3,500, but it is higher in the initial years and lesser in the subsequent year, compensating for the higher in the initial years. Friends, since we have come to this, we have delved so much deep into the Ind AS 116. Let's do one more thing. This table gives you an idea that entity has to recognize the deferred tax assets and deferred tax liability. My dear friends, here I'd like to give one example, one very good sentence, and I'm sure you know this, but still, ye dil hai ki manta nahi, and I like to repeat this here. When the carrying amount of an asset is more than the tax base, it always results into DTL, taxable temporary differences. Reverse is that when the carrying amount of liability is more than the tax base, it always results into computer. What's the answer? DTA. With this formula in mind, let's look at this. Computer G, let's see. ROU is an asset. There is no tax base for ROU. Income tax department will not take cognizance of our ROU asset and lease obligations, lease payment. Is safe for me. It is only lease rentals, expenses. I don't know what language you are talking, Mr. Desai. Ji haan. As a result of which there is zero tax base of ROU asset. Now let's compare Computer G two things. A, the carrying amount, which is 2435 as compared to lease and the tax base. Taxable temporary differences 2435 multiplied by the 25% tax rate, you get deferred tax liability. At the same time, you have to recognize the deferred tax assets or liability related to the lease obligation. This is the liability, and the carrying value of the liability is more than the tax base. It produces deferred tax assets. And as per the offsetting requirement of Ind AS 1 also, an entity can always offset the deferred tax asset and a deferred tax liability. Later on, there's a difference in the carrying amount of the deferred tax asset and liability, and ultimately this becomes zero. My dear friend, I wanted to address this little later, but since we are on the number crunching platform, I thought, why not you check it now? If time permits, we'll revisit it once again. All right, sir. So this is what I wanted to give you a flavor of how Ind AS differs from the early one and what these things are. Okay, sir. Computer G, let's go here. जी हाँ दोस्तों, my dear friends, here is the definition. There has to be a contract. Contract must have a commercial substance. If any of the parties has right to cancel the contract, but without payment of any penalties, without payment of any significant penalties or damages or the charges, we won't call it a contract. It has to be some serious. It cannot be a joke. So first determine, is there a contract? If yes, ask a question. Does this contract give right to control the use of identified asset for a period of time in exchange for the consideration? Consideration is what, sir? Lease payments. Now, if that asset, again, we'll see two important phrases and words and phrases. A, identified assets. B, substantially specified asset. Specifically identified and specified. These two phrases, words are very important. They could be implied or they could be explicit. Either they could be mentioned explicitly or implied. But basically, essentially, the asset has to be, the underlying assets have to be identified and specified. If the underlying asset is not specified, it is not a contract which is going to be covered under 116. What happens in that case? You have a contract, but the asset is not identified. Then it's not covered by 116 from the perspective of the ROU asset and the lease obligation. I'd like to give an example here of identified and specified asset and the asset which is not identified. I'm hiring a car from a travel agent. Only condition is that the car should be in an immaculate good condition. It should be AC and it should be a sedan. Decent car. Okay. I'm not specifying which make, which vehicle number, which color. I'm not telling anything. You give me any car, so far it has come at 8 o'clock in the morning and leaves me at 8 p.m. There is a contract, but the underlying asset is not identified. The asset is not fixed. The lessor has right to use this underlying asset for anyone's benefits, for its economical benefit. Correct, sir? So that is not a contract as perceived by Ind AS 116. So in this case, the lease rentals paid by me are expensed out. I do not recognize the ROU asset nor even the lease obligations, and I don't get into the all nitty-gritty of accounting of ROU and lease payments. On the other hand, I say that I want this Honda City car. Vehicle number is so and so. Correct? So obviously it is identified, it is specified. And secondly, for these 3 years, I should be allowed to use throughout this period of 3 years' time as per my sweet will, as per my desire. I will decide as to who has to use it, when to use it, and whether to use it or not. Correct, sir? So this asset is essentially identified, specified. So when an asset is identified or specified, concurrently it also mean that lessor does not have right to exchange this asset for his economic benefit. That means the lessor cannot use this particular Honda car bearing XYZ number for anything, for subletting, for giving to others. If the lessor takes away this car for 7 days, every quarter, but not for subletting to others, for maintenance. Do you think he's getting any benefit out of this maintenance when the car is in the garage for servicing? No. It is mandatory. So if that does not mean that my prerogativeness is hampered. What's the prerogative? That I should be allowed to use the car the way I want to during this period of lease term without any interference from the lessor. If the car meets with an accident and then he has to change the car, that does not temper with this condition, because that is something abnormal. So there has to be a contract. This contract conveys the right to control, the right to use the asset, identified asset, specified asset, for a period of time for a consideration. The asset is identified. The lessee obtains the economic benefits. Lessee directs the use of the asset. Either I use it myself or I give the direction that who should use it. My employees, my staff, my family. So this is known as a direction to use. Then the contract contains a lease. So if the contract contains lease, my dear friend, what do? We bring it down to the present value, all lease payments. Now, lease payments over what term? How many years? The car may have the useful life of 10 years, but I have taken the car only for 3 years. Should my lease term be 3 years or 10 years? It should be 3 years. Unless there is a right to renew the lease at an attractive terms or purchase option. There's a different case. My dear friends, I have embedded here one example of the purchase option. Because lease term is of immense importance for two reasons. You discount the present value, you discount the lease payments over the term. And this term, if it is 5 years, the answer is different. If it is 10 years, the present value will be different. And that will be the impact on the ROU. And again, from the perspective of the ROU, you depreciate asset over what term? Use lease term. So lease term is very important. We'll see those who are research oriented and are interested in delving deep into the Ind AS 116. Please note down these paragraphs. Paragraphs 18, 19, 20, and 21. Paragraphs 18, 19, 20, and 21 of Ind AS 116 are of immense importance for those who want to understand the nitty-gritty of under what circumstances lease term can be extended. Only if it is to the identified asset, the underlying asset has to be specified, and this specification may be either explicit or implicit. An asset is not identified if the lessor has substantive right to substitute the asset for an alternate asset throughout the period of use. So point is, if the lessor has a prerogative right to use this underlying asset for his economic benefits, we will not call it a lease, which will trigger the recognition of lease payments and B lease ROU assets. Now they say that what do you mean by substantive right, a lesser substantive right to substitute, has a practical ability to substitute the asset throughout the period of use and would economically benefit from exercising its right to substitute the asset. So rather than me, the benefits will go to the lessor. In that case, we will call that the lessor has a substantive right to substitute the underlying asset. Now, in that case, this is not the kind of lease Ind AS 116 is talking about. Or lessor, this is very important. Okay. The right to economic benefit is that substantially all the economic benefits, prerogative, privilege to use it, exploit it to the best possible in the best possible manner, and throughout the period of use. Now here they say that which party has the right to direct the use of the identified customer or the supplier. If there is a customer, that means the lessee, then we call it the asset is identified or specified. In other words, which party has the right to direct how and for what purpose the identified asset is used throughout the years. Right to change what type of production in case of machinery, when the output is produced, where the output is produced, how much. So all this, if you go to see, are relevant activities. The activities which will help get some economic benefits to the lessee. It's very important to differentiate here the relevant activities and activities which are relevant for making the economic use and activities which are not relevant. Jiha. This term is used in Ind AS 110 also, the consolidated financial statements, which defines the basis of control. control has to be for the relevant activities. Same applies here. Now let us take an example that we bought a very expensive, sophisticated equipment, and I have taken it on lease. I have all the rights to decide when to start an equipment, when to produce, when to use it, how much to produce, when. All relevant activities, decisions are with me. The lessor has rights on the following activities. What should be the color of the machine? Which company should be the which company we should take the insurance policy? Correct, sir? And which garage he should send this for? Sorry, which agency he should give the contract in case of the repairs and maintenance? If there's a big default or there's a breakdown, which company should be given a contract? So these are almost irrelevant activities. How does the color of the equipment will make a difference? Got my point, sir? But as against that, compare the rights which I have. What are the rights? When should I start an equipment? How many years, how many hours I should use it? 8 hours? 16 hours? 1 shift, 2 shift, 3 shifts? What production mix I should produce? So the point is, I should be able to get the economic benefit from the use of the underlying asset. And then it's known as an asset which is identified or specified. This chart is adopted from the standard. There they are using the words customer and the supplier. The supplier here is perceived as the lessor and the customer is perceived as the lessee. So on perusal of this, you will see that who has more relevant substantive rights. If customer, that is the lessee, has the rights, then it is considered to be a lease. And in that case, we will talk about all the jargons of our real estate and the present value of the lease liabilities, lease obligations. Very important, customer has the right to obtain substantially all of the economic benefits. If that is not clear, then does the customer or the supplier has the right to direct how and for what purpose the asset is being used throughout a period of use. In a very rare cases, it happens that none of the parties have any right. But in practically all the cases, things are well defined, stipulated, and well coveted form. Now here is, my dear friends, comparison. This will give the comparison of the, yes, we have seen the comparison of Ind AS 116 and Ind AS 17. As I told you, the same lease would have been classified as an operating lease under the Ind AS 17, and in that case, the expenses in case of the lessee would have been the rentals claimed by the lessee are A, the depreciation, and B, the interest. Hence, they are, in this case, in the 116, EBITDA is higher. EBITDA is higher. Okay, sir? Yeah, this was the comparison. We did it there. Now, sir, Computer G, let's now start from the beginning. There has to be a contract. The contract means a legally, commercially, properly enforceable contract, which is a commercial substance. This contract should give right to the lessee to use the underlying asset throughout the lease term. That means the asset is identified or specified. And concurrently, it also means that the lessor does not have right to use it for his economic benefits. If it takes away the underlying asset for the repairs and maintenance, that's not construed as the assets taken for the economic benefits. That does not deprive the asset of its character of being specified and specified and identified on it. Now they say that in that case, the lessee has to remeasure this present value of the lease payments using the lessee's interest rate, which is implicit in the lease. The rate which is implicit in the lease has to be used first. If that is not available, then the lessee has to use the incremental borrowing rate. So let's first look at what do you mean by the lessee's interest rate implicit in the lease. This is defined in the Ind AS 116. Interest rate that causes the present value of the lease payments and unguaranteed residual value to equal the sum of. So on the one hand, these two things has to match the fair value of the underlying asset and initial direct cost of the lessor. That should give the implicit rate. And in that case, we do the calculation using the internal rate of return, IRR. The interest rate implicit in the lease is the discounted. To put it differently, is present value of the lease payments and the unguaranteed residual value, which is this part, equal to the fair value, this part, and equal to the fair value of the underlying asset plus initial direct cost to the lessor. Practically, it is the lessor's yield on a net investment, which is from the perspective of the industry. Let's take this example. Lease term is 5 years. The payments are 23,63,000 per annum at the end of each year. This is known as lease payments in arrears. Arrears का मतलब ये नहीं कि आपने गलती की है. Don't get paranoid about this word, sir. Fair value of the underlying asset at the commencement is 1 crore. Initial direct cost of the lessor is 1 crore 2 lakhs. So this 1 crore 2 lakhs has to match with something. 1 crore 2 lakhs comprised of कैसे आया? Fair value of the underlying asset is 1 crore. Initial direct cost is 2 lakhs. So this portion, my dear friend, this portion is 1 crore 10 lakhs. It has to match with present value of the lease payments. Sorry. Expected unguaranteed residual value is 20 lakhs rupees, which is given by the lessor. And so the fair value is equal to fair value plus lessor's initial direct cost is 1 crore 10,000, 1 crore 2 lakhs. I have plotted. So my initial investment is 1 crore 2 lakhs. This is 23. Again, why have I taken 43 lakhs 63,000 in terminal year number 5? Because of the residual value, expected unguaranteed residual value at the end of year 5. So this gives me the present value. Now this, when I plot it in an Excel and do the IRR, I get 10% return. So my implicit rate here is 10%. Ideally, one should go for that. But what do you need in this case, sir? You have fair value. If not, lessor is not giving, you have the fair value. You have your initial direct cost. So you get these two figures. You are privy to this figure number 1 crore and figure number 2 lakhs. So this, as far as this figure is concerned, but do you have the residual unguaranteed value? This information, if not given by the lessor, then you cannot compute the implicit rate of in the lease from the perspective of the lessee. All right, sir. So friends, this was very important for us to understand that under what circumstances you are compelled to go for incremental borrowing rate of the lessee. When you don't have the unguaranteed residual value, or maybe the fair value of the underlying asset, that's not a challenge. The real challenge is the unguaranteed residual value. So when you don't get some numbers, figures from the lessor, you're compelled to go for the incremental borrowing rate. And my dear friend, let me tell you, mostly it is the incremental borrowing rate of the lessee. Now let's see, computer G, let's see this definition. The rate of interest a lessee would have to pay to borrow over the similar term with similar security. The funds need to obtain an asset of similar value to the ROE asset in a similar economic environment. Let me give you examples from the perspective of the vehicle. If I go for the very swanky branded vehicle, say BMW, so they offer me interest rate of 6.5 or 6.99. Whereas as against that, if I go for the Innova High Cross, correct, bank will give me the rate of interest at 8.9%. As against that, if I go for the EV model, correct, then I may be perhaps getting the rate of interest at 6%. So it depends on the similar security over a similar term and the similar value. So this depends on it depends on the underlying asset and so many other factors to go for how to go about the incremental borrowing rate. But technically, let me tell you, there is one more way to look at the incremental borrowing rate also. This is given in this 109. You start with the market base rate for the similar term and currency. Assume 5-year risk-free GSEC is 7%. Add the company's credit spread over the term, which is maybe about 2.3%. And you give a security. This has a result of bringing down the rate. Assume the security deposit adjustment is 0.8. So in this case, your incremental borrowing rate is 8.5%. Friends, ideally you should start with the implicit rate in the lease, but if you don't have, then you are compelled to calculate the IBR. In most cases, they always say that entity has used the IBR. Why? Because the lessor has not shared the fair value, residual value, etc. So the implicit rate is not readily determinable. Correct, sir? That's the reason. Computer G, here is example of the short-term leases. Now, what is the key word for the short-term leases? A, class by class, or B, asset by asset. For short-term lease, 12 months, it is class, not lease by lease. Lease by lease is for the low value assets. Remember the example I gave you about 40,000 rupees per laptop. And the threshold limit of the low value is either 40,000 or 50,000 rupees. But the contract is not for just one laptop. It's for the 10 laptops. So the total contract value is 4 lakhs rupees. Now you should consider which figure? A, 4 lakhs, B, 40,000. Answer is B, 40,000. Reason being, asset by asset. And not class by class. Had it been by class, the amount would have been 4 lakhs. Got my point, sir? Okay. An entity that has leased several terms of his equipment, some for less than 12 months and some for more than 12 months, with some containing purchase option. Oh, with none containing the purchase option. The criteria here is the absence of purchase option, absence of renewable rights. What are the conditions? What were the conditions for the low value leases? The items should not be interdependent or integrated with some other assets. अगर वो होता तो it would have been qualified as a low value asset. Just the entity can use a short-term lease extension because of the leases terms of 12 months or less, and there is no purchase option renewable. A lease with a 9 months non-cancelable term with an option to extend the lease for 4 months. Important is the existence of this option and the chances that you will be exercising the options. At the commencement, lease is reasonably certain to exercise the option because the monthly lease payments during their extension are significantly below the market rate. आपको ऐसी terms दी जाती है कि you extend at the same rate or maybe 10% lesser than the market rate. You're bound to extend it. So it is reasonably certain that you will exercise this extension option. My dear friends, here comes a very important chapter, very important slide. I would call it the 5-star slide of this presentation. Once there is a contract under which the underlying assets are specified, identified, giving the lessee right to use this throughout the lease periods. It is a lease which has to be recognized as per Ind AS 116. The beginning point is the present value of the lease payments. Then immediate impact is the ROU asset. Mind you well, the ROU assets recognition is something beyond, something more than the lease payments, something more than the present value of the lease payments. Meaning, ROU initial measurements start with the lease payments present value. Then there are something to be added, like the incremental direct cost, the kind of defined kind of the decommissioning cost, then the lease incentive, etc., etc. We'll see later. So let us first start with the fixed payments, including in substance fixed payments, less any lease incentives. That will cover a little later. So only if the lease payments are fixed, you have to take into account for computing the lease payments. If the lease payments are as under 1 lakh rupees per month fixed plus 2% of the turnover above 1 crore rupees. 2 crore above 1 crore is a variable lease. It is not linked to a rate or an index. Hence, my lease payment should be only 1 lakh. Only 1 lakh I should factor into account for plotting my payments cash outflow. So don't include the variable payments unless they are dependent on an index or a rate. So when I have linked the variable payments of additional over and above the basic fixed length of free rental of 1 lakh, I have linked it with the turnover, with the profit, not with the index or rate. Hence, this variable is to be expensed out. Now, the question arises, if I cannot capitalize, what do? I expense them out. So variable lease payments, if they are dependent on the cost inflation index or interest rate, then they are considered to be the lease payments. If they are considered to be lease payment, I'll plot it in my payments schedule and calculate the present value of the lease obligations. Payments for penalties for the terminating the lease, if it is probable. Exercise purchase price option, if it is probable, include in the lease payments. What it could be, they may give a right to buy the asset at the end of maybe at the end of 10 years, the lease term, and you are very likely to buy the particular underlying asset, because the condition is that, Mr. Desai, you buy this underlying asset at the end of 10 years at 10% of less than the market value. Obviously, my dear friend, I'm going to buy that asset. Correct, sir? So that is included in lease payments. Residual value guarantees given by the lessee to the lessor. Okay, all this sigma adds up to the lease payments. Present value of all these to be taken into account, and in that case, that is your beginning point for the ROU asset. ROU asset के और भी कुछ पहलू हैं, बताऊंगा आपको ब्रेक के बाद. Meaning, present value of lease payment is not the only ROU amount to be recognized. There could be something more than lease payments, like initial direct cost of the lessor. So that has to be added to the ROU value, which arrived based on the initial recognition of the lease payments. So, my dear friends, very important for you, all of us, to understand what are the components of the lease payments. If payment is not variable, is not linked to any interest or index or rate, don't consider them for this thing, for calculating the lease payments. Rather, expense them out. They will not be capitalized. Got my point, sir? Everything. And my dear friends, item number 2, item number 3, item number 4, item number 5 are all estimates. Any change in estimate is always accounted for prospectively. If there is exercise purchase option and you were sure of buying this at the beginning of year 1, year 2, but at the end of year 3, you decided that you may not go for the purchase option, you'll remove this item from the lease payments prospectively, not retrospectively, because this is an estimate. And we all, dear friends, know change in estimate is always accounted for prospectively. Computer G, this is in substance fixed amount. Company ABC leases a production line. The lease payments depend on the number of operating hours of the production line. That is, ABC will pay rupees 1,000 per hour. However, the annual minimum payment is 10 lakhs. So this 10 lakhs you pay regardless of the usage. Now, when they say 1,000 rupees per hour and for 1 lakh you do pay 10 lakhs, that means you are using it for minimum 1,000 hours. Correct? 1,000 hours at 1,000 rupees per hour produces 10 lakhs rupees. The expected usage is 1,500 hours. Payments of 10 lakhs is in substance. The fixed payments and hence will be considered as a part of lease will be discounted. However, the payment of 5 lakhs which is being paid for 1,500 hours, 5 lakhs is a variable payment not linked to index or a rate and hence will not be forming part of the lease payment for the calculation of the present value, but rather as and when they incur, as in when the expenses are incurred, they will be expensed. Lease payments on the store is amount to 1% of the revenue. There is no minimum. Rental payments. Now this, since the variation is not linked to asset or to index or a rate, they are not considered as lease payments. In that case, they are not capitalized. They are not discounted. But what do we do in that case? We simply charge them to expense income statement. So this will not impact the present value of the lease payment, and concurrently no impact on the initial measurement of the ROU asset. Variable lease payment, depending on the index, if the initial amount is 25 lakhs, the rent will be reviewed every year and increased by the change in the customer price. Now let's take that in the year one, the rate is the rental is fixed at 25 lakhs rupees per annum, and the index is 100. Correct? Next year, the index become 110, and the lease was for 5 years. At the end of year one, what is the remaining period? 4 years. Now, at the end of year one, beginning of year two, the index has gone up from 100 to 110. So, what is the increase, sir? 10%. My rentals then will be 25 lakhs plus 10% of 25 lakhs, which is 2,000, 2 lakhs 50,000. My rentals will be then 27 lakhs 50,000. This I discount for balance 4 years. I arrive at some value, and which is the present value of the balance 4 years, and then if there is any difference, it will be debited or credited to the if there is increase or decrease in the lease obligation, it will be accordingly accounted for. And I've given one example later on, and I have also given that what happens when the lease rentals, when the lease payments are remeasured. Residual value guarantee. This is last part for that 5-star slide. Lessee has entered into lessor for lease of car. The term is 5 years. Z, the lessee agrees on the residual value guarantee. If the fair value of the car at the end of lease term is below 400, then Z will pay L, the lessor, an amount equal to the difference between 400 and the fair value of the car. Now, suppose, for example, ignore the claim. For example, what he has assured is 400, and you are likely to get 300. 400 is the assurance given by the lessee to the lessor, and you expect that you will get 300. So, what is your call? What is your burden? What is your commitment? 100. Correct, sir? So 100 you will include in your lease payments. Now, sir, here is a small example of, once again, in substance fixed. Because when I had, when Institute has published this, that, today's this session, and one of my participants called me up. He knows me. He says, sir, give one more example give few examples of in substance fixed. So here is one more example of in substance fixed. Thank you, Samir. Samir, I hope you're listening to this, you're viewing this, and you'll be smitten by seeing this example. 3 years का contract है, photocopier, the ₹5 per copy is a variable. The minimum monthly payment is ₹50,000 regardless of the copies. Expected copies are irrelevant for the lease liability measurement unless truly variable beyond the minimum. Unless they are truly variable beyond the अगर ₹5 पर है तो महीने की कॉपीज कितने हुई 10,000. अगर 15,000 से ऊपर होने वाला ये तो अलग बात है, but not the case. Which is included? What is included in the lease payments? ₹50,000 per month, because it is unavoidable. It is in substance fixed. Whether you take copies 5,000 copies or 15,000, the rate is fixed, and that's why this is known as in substance fixed. It will be included in the lease payments. Okay, then when the lease contract was entered at 200, the rent was 1 lakh. Sorry, I forgot to add. Sorry. Sorry, sir, this was 10 forgot to be added, and we understand. So what I want to add is, what I want to share you here, that when the rent was 1 lakh, the index was 200, and now when it becomes 220, rent will become 110. Hypothetically, at the end of, I think this slide was truncated, but I explained you. Now let us presume hypothetically, now, computer G, let's take example right away for the benefit of my friends. Okay, let's take purely on hypothetical basis. When the index was 200, the rent was 1 lakh. Okay, and now when it becomes 220, your rent should be, computer G, like this. And here 1,10,000. Assume that at the end of year one, the present value of the lease obligation is say 2,39,000. And the present value of this lease obligations when revised lease payments obligation works out to be say 2,49,000 rupees. Okay. Why? Because I restated the lease payments based on the index, and which, since it is based on index, it will form part of my lease payments which have to be discounted. So what is the increase in my lease obligation? Lease obligation is increased by 10,000. So what is my accounting entry, sir? Debit ROU asset and credit lease obligation oblique lease payments by 10,000 rupees. Okay, sir. This is how the lease payments, if it is linked to an index or a rate, it works. So we have now till now understood as under. It is a lease contract. We understand is a contract, commercially enforceable contract. Underlying assets are identified, specified, and entities have agreed for lease payments. So while calculating the present value of the lease payments, I need to ask my question, Mr. Computer, what comprise the elements of the lease payments, which have to be discounted? It may be nomenclated as lease payments, but are they qualified to be the lease payment pursuant to Ind AS 116? So what we need to see, sir, we need to see these items, 5-star. Okay, the 5-star shit. My dear friend, this fixed payments including in substance. Fixed payments, variable lease payments that depends on index or a rate. Sir, I'm repeating this slide. The reason being, the crux of lease payments lies here. If they do not qualify to be the lease payment, do not recognize them as the lease payments, expense them out. This will have a clear and cascading impact on the lease payments present value, A, and B, concurrently and simultaneously on the initial measurement of the ROU asset. So these are very important. Fine. So then we found, okay, now lease payment, now when we come in the practical situation, when we see, sometimes the entity, the lessor, gives other services also. In case of a car, they may give the services of a driver, of a chauffeur, or offices in a commercial complex. They may charge some common area maintenance services fees. And they give you a bundle of these lease payments as one single payment. So have you give me one single payment for 1 lakh rupees per month per car, and we'll also provide the chauffeur to your car. The car is specified, identified as per your specification, and we give the same car but with a driver, and you don't have to pay separately for the driver. The question arises, when I'm availing of these two services by virtue of which includes the payments for the vehicle at the same time for the drivers also, should I discount entire 1 lakh rupees for a period of 5 years and come to the present value of the lease payments? Answer is no. I need to bifurcate these two amounts. A for the car, B for the driver. Here in this example, for the office premises and the common area maintenance. Entity has not bifurcated. So what do? I found the standalone price. That means the office premises, had I not availed of this common area maintenance, I would have paid 4 lakhs rupees per month. Sorry, per annum. But now I'm paying 5 lakhs. But at the same time, had I availed of this CAM maintenance, I would have paid 2 lakhs rupees per annum. But now I'm paying only 5 lakhs. So I find the weightage of these two amounts, A, premises, B, common area maintenance. So I find this is 66% and 33% is a weightage in 6 lakhs of these two standalone prices. And I apply this to 5 lakhs. I apply this percentage to 5 lakhs premium, lease payment. So in that case, 1,66,667 to be expensed out, and 3,23,323 will be a part of my lease payment to be discounted to the present value. This is where separating contract. Now the standards say that if it is difficult for you to separate these two elements, then use the practical experience as per paragraph 15 and don't allocate, in that case, consider entire 5 lakhs as lease payments, provided it's very difficult for you to ascertain the allocation between these two elements. So we say that lease payments has got 5 elements, and you bring it to the present value. I had mentioned to you that where lease ends, ROU starts. The very first example of 2004-35 was the most simple example, wherein the two elements were there only: A, lease obligations, B, ROU sit. There was no initial direct cost, estimated cost to dismantle, remove, or restore the measure in accordance with Ind AS 37. If you recollect the Ind AS 16, then also there is the decommissioning cost. It is same like this. Then prepaid lease payments, deposits, lease incentives received from the lessor by the lessee, and result is right of use asset. Essentially, lease obligation need not necessarily be the same as the lease liability. It is increased by initial direct cost, estimated cost to dismantle, prepaid lease payment. Now, dear friends, whenever there are the lease, there is always a lease deposits paid by the lessee to the lessor. These deposits can be of two types: A, refundable; B, non-refundable. If this deposit is not refundable, adjusted against the rent, then it is nothing but added to the ROU asset. If the lease is refundable and interest free, my dear friends, then it becomes the financial instrument, financial asset. And Ind AS 109 say that all financial assets have to be measured at fair value, even at initial recognition. So if there is a deposit which is refundable, non-interest bearing, then we need to fair value this refundable deposit. Find the difference between the nominal value and the fair value. If the nominal value of the deposit is 5 lakhs and the fair value is 3 lakhs, the difference of 2 lakhs will be added to the ROU asset. Computer G, let's go to this Excel file, which will give the complete example of this. Don't tell me anyway. Okay. So here, just 1 minute, please. Slide number 23. Okay. Friends, here is an example where friends, can you see the Excel sheet on your screen, sir? Hello.
Yes, sir, it's visible.
It's visible. Fine. Okay. So these payments are of various categories, but for sake of simplicity, I put my present value of the lease obligation as 23 lakhs 3,610. There could be other element. This is fixed or in substance. Variable lease linked with an index or a rate would be added here. Purchase price option fair value would be added here. Residual value guarantee will be added here. guarantee by the lessee to the lessor, and penalties, if any, also will be added here. So this adds up to 2303. Now to this I will add initial direct cost of 10,000, estimated restoration obligation of 1 lakh, prepaid lease non-refundable deposit 4 lakhs, and lease incentive I have received 5 lakhs. So my carrying value now becomes like this: 2303 610 added by 10,000 and added again by 1 lakh, added again by 4 lakhs, and reduced by 5 lakhs rupees. I get this. So computer G, now this is what I have done, sir. The present value of the lease obligation 2303. This is my starting point. Okay. So the amount capitalized in ROU is as under. This is 2303, 4 lakhs. My depreciation would be 10% of 23 lakhs 13,000 and not 23 lakhs 3,000. Okay, sir. My entries are like this: ROU asset account debit to lease obligation, the very first entry. Second is ROU asset account debit to bank, advance lease. This is advance lease plus initial direct cost 4 lakhs 10,000. ROU, there's a restoration obligation. Debit ROU asset and credit the provision for restoration obligations. So I make this provision. I recognize under Ind AS 37. And I received 5 lakhs rupees from the lessor. That reduces the carrying value of my ROU. Ultimately, I got 2316. Depreciation will be like this for the year 1, 10% of 2316. Finance cost in the first year will be 10% of this. So my two expenses will be debited in my income statement: A, depreciation; B, lease obligations. Okay, sir. And this is the example who's there. Fine. Okay. Now, computer G, let's go back to. Let's see. Okay. I think something remained. This is about the treatment of refundable non-interest bearing deposit. I have given a deposit over a period of 10 years with incremental borrowing rate of 10%, and 5 lakhs is my initial value, nominal value of the deposit. Deposit which I have given is 5 lakhs. That's known as the nominal value of the deposit. I reduce it to the present value by using 10%, yes, raised to the power of 10. This is my PV factor. This is my PV value, present value. What is my nominal value? 5 lakhs. What is my present value? 192. Difference is capitalized as my ROU set. So computer the very first entry is lease deposit account debit 5 lakhs to bank. Then ROU asset is debited by 3 lakhs 7,000 and credit is lease deposit. By that, my lease deposit will come down. I have applied Ind AS 109. This being a financial asset, it has to be measured at fair value initially also. This is my fair value measurement. Now what happens, sir? Unwinding of discount. So allow me, friends, a minute. Unwinding of discount, this goes up by 10% every year, and this produces 5 lakhs rupees at the end of 5 years. This is pretty simple. Okay, nothing to do with the lease, but mainly to do with the lease accounting as per Ind AS 109. Now, the lease term is a non-cancelable lead. We have something called lock-in period and all this. So this include lock-in period. Suppose I have the lease period of 5 years. Within this period of 5 years, nobody can cancel it. And if they cancel, they have to pay the lease rentals. If lessee cancels, they have to pay the lease rentals to the lessor. If lessor cancels, then lessor will have to provide for these kind of premises to the lessee. Fine. But normally people don't does it. Optional renewable period where lessee is reasonably certain to extend the lease, and periods covered by the option to terminate the lease where the lessee is not likely to terminate the lease. So this, as far as item number 2 is concerned, he is likely to exercise. Item number 3 is concerned, he is not likely to exercise. Negative. He's been given right to terminate after 5 years, but he is not likely to terminate. It amounts positivity. You have entered into a contract for 10 years. initial amount is period is 5 years time, but the lessee has put up the furniture fixers, very swanky furniture fixers, which anyone would understand, ke boss, he has spent so much that he is not likely to cancel after 5 years, but he is likely to continue up to the 10 years time, which is the tenure given by him for extension. Non-cancelable period 5 years, optional renewal period 5 years, where the lessee is reasonably certain to extend the lease. So in that case, what lessee will do? Plot the payments for 10 years, find the present value, calculate the PV. Also depreciate the ROE over a period of 10 years time. Lease term begins at the commencement of the late and includes any rent-free period. If the rent-free period is for 3 months, you still ignore that and start from the April 25 only. You will not start from April 27. Your term will remain same, 10 years. Termination options held by the lessor are not considered. Very important. If the termination clause is given to the lessor, that is ignored for this, right? Now, we initially calculated the ROU. ROU, after being initially measured by 116, goes into the lap of 16, goes to the regime of Ind AS 16, meaning either cost model or devaluation model. Initially, cost, add less accumulated depreciation, less accumulated impairment, because you have to apply Ind AS 36 also. The ROU is subsequently measured using the cost model. It may be revalued if belongs to a class of assets that are revalued. Example, you have taken a lease on building. You have taken a building on a lease. And the entity as per Ind AS 16 follows the revaluation model for the building. So in that case, this ROU asset dash building will also be measured using the revaluation model. A very important star mark. Carrying amount of ROU asset changes, not just because of the depreciation and because of the impairment losses. So allow me a minute. This is not giving me enough code. Not just because of the accumulated depreciation or the impairment losses, but it also gets affected. It may go up or may go down because of the changes in the carrying value of the lease obligations, lease payments. If the lease liability is remeasured, then the immediate cascading impact is on the lease or the ROU asset. On remeasurement of the lease liability, oh, computer ji, aapne to bilkul yahan rakh diya. If lease liability increases, it is accounted for as debit ROU asset and credit the lease liability. If the lease liability decreases, it is accounted for as debit the lease liability and credit the ROU asset. Let us take an example where lease liability is decreased by, say, 2 lakhs. Lease liability is decreased by 2 lakhs. At that point of time, the carrying value of the ROU asset was only 1,50,000. So entry would be as under. You write down, please. Debit lease liability 2 lakhs, credit ROU asset 1,50,000, credit profit and loss account 50,000. Correct, sir? All right, sir. We come to a very interesting stage now. What when the lease period is increased and what when the lease period is decreased. But before that, let me give a small example. You have taken entry into lease and at the end of 5 years. At the end of 5 years, let's go to the more realistic example. Okay. At the end of 5 years, the carrying value of my ROU asset, at the end of year 3, the carrying value of my ROU asset is 1,391. Okay, you can see here, ROU asset is 1,391. At the end of year 3, the carrying value of my liability is 1,586. Computer G, where is lease obligation? 1,586. This is the scenario at the end of year 5. And at the end of year 5, the lease is cancelled. That means I am not required to pay any lease payments to the lessor. And obviously, the underlying asset is taken back by the lessor. So what should be the entry? So I should first debit the lease obligation by 1586. I should credit my ROU asset. Computer जी, please help me. समय बहुत कम है. And the difference is recognized in profit and loss account. 195 will be recognized in the profit and loss account because the lease is cancelled. Rightly or wrongly, let's not go into that. But it is cancelled at the end of year 3. So I should de-recognize my lease obligations by debiting, and I should at the same time de-recognize my right of use asset. Difference is recognized in income statement. Here is a case of the profit. It could be a case of loss also. Okay, sir? All right. Carrying amount of ROU asset changes when the lease liability is remeasured. Increase this, we have seen an example. Okay, sir? Now, depreciation of ROU asset is also very important. If the lessee is reasonably certain not to obtain the ownership, ROU will be depreciated over whichever is shorter, either the lease term or its useful life. That is case number 1. Lease term is 10 years. Useful life of the underlying asset is 20 years. No purchase price option, no renewal clause. Depreciate the ROU asset over a term of 10 years unless there is a reduction in the lease term. Lease term में भी reduction हो सकते हैं and बताएंगे आपको हमें yes sir how to go about it, sir. Case number 2, fine. Lease term is for 10 years. Useful life of the underlying asset is 20 years. The right to renew the further for 10 years at the same lease payments. Lessee is likely to exercise the option to renew the lease. आपको शर्त ऐसी दी कि you're bound to extend the lease, sir. You're bound to extend the lease. So in that case, the lease term is to be treated as 20 years and not 10 years. So in that case, you will discount it to the 10 years, 20 years time, at the same time recognize it. Now, there is one very important question, and this has been asked many times. So before you could ask me the question, I have included it in my question. This is based on the companion of opinion of the EAC Expert Advisory Committee that accounting treatment of the perpetual lease in case of in the books of the lessee, the perpetual lease forever. In that case, you recognize ROU land but do not depreciate. Because again, paragraph 58, write down this paragraph 50 and 58. Write down this paragraph 50 and 58 of Ind AS 16, not 116. That also gives the guidance here that land is not to be depreciated. At the same time, there is question number 8. So friends, note down this. Take a picture of this slide. Take a picture of this slide. And I would implore you to please read these 2 queries in this EAC opinions. Volume number XLY part 2. I have given the page numbers also. Friends, do that. In view of the time release, I cannot do that. But now this is very important for us. You may have to remeasure the lease liability. That means the first case in our till now we studied is when the lease rentals are linked to index, you remeasure lease liability. Indexation has gone up from 200 to 220. Lease rentals have gone up by 10%. And in that case, ROU asset will go up, liability will go up. But the moot question, whenever there is a change in the lease term, for whatever reasons, what should be the rate at which the lease for the balance term is to be remeasured? Should we use the same rate as we have used initially or use the revised discounting rate? So when the lease term changes due to the change in the non-cancelable period, the assessment of exercise of the purchase option or any one of these, you have decided to, you have been given a right to purchase option. And initially you have considered this that you want to buy, but then you change your term. Or maybe you have decided not to buy, not to exercise this option, but later on you decided to exercise this option. You revise your lease obligations. When you remeasure lease obligation under these 2 circumstances, use the revised rate for discounting. You're not supposed to change the discounted rate when you change the lease term or remeasure the lease liability. You beg your pardon. When you remeasure the lease liabilities under these three circumstances, use the same discounting rate, unchanged discounting rate. The amount expected to be payable under residual value guarantee, the future lease payment changes due to change in index or rate used to determine the lease payment, and the variability is resolved so that they become in substance fixed payment. So essentially, whenever there is a change in the term, you use the revised rate, whether the term is reduced or increased. But when the changes is because of these three factors, you use the same discounting rate for remeasuring the lease liability. Now, this is very important. And here, friends, you pay ultra more attention to these 3-4 slides. I know गड़ी की सुइया कह रही कि हमें QA सेशन में जाना है. But मैं विनती करूंगा कि please Q&A session may be reduced to 15 minutes or maybe we'll start at 3:45. Lease modification is a change in the scope of the lease or the consideration for the lease. That means your underlying assets go up or come down. That was not a part of the original terms and condition of the lease. That is, for example, adding or terminating the right to use one or more the underlying asset. This does not mean that it should not be, it is not considered as a lease. Basically, the new lease, with the two types of lease, either it is a separate lease or it is a part of the same lease. That if it is a separate lease, if it is a standalone price, if it is a totally different kind of leasing, then don't touch the existing lease. You account of lease number 1 and lease number 2 separately. आपके पास एक lease है. If it is a separate, if it is considered as a separate lease, don't touch the existing lease. But now a lease modification can result in a separate lease or change in the accounting for the same lease. Now, a lease modification that grants the lessee the right to use the existing lease asset for an additional period of time does not result in a separate contract. I have a lease of 5 years. I extend it to 10 years. I have a lease of 7 years. I extend to by 12 years. I modify the existing lease by using the revised discounting rate because it's a modification. It is not a new asset. It is not a new lease. A lease modification is a change in the scope of the lease like this, or consideration for the lease, or maybe change in the price. That was not part of the original condition. If it is a part of the original condition, then it's a same lease. Change in the contractual terms, increase in the scope of lease by adding ROU for the one or more underlying assets. You are adding one or more, but that was not part of the original lease. The original lease for 10,000 in building number on floor number 2. Floor number 2, if you increase from 10 to 15, it is a lease modification. It is not a new lease. But floor number 3, if you go for additional 5,000 square feet, it is a separate lease. Don't touch the existing lease. As against that, if there is a decrease in the scope, recognize the gain or loss on partial or the full termination. Full termination we have seen, correct? Your carrying value of the asset and obligation was different, and we recognize the difference in the profit loss account. But here is going to be an example where the lease reduction is not full; it is partial. Decrease in the scope. 10 years lease for 5,000 square meters. Lease payments are 50,000 rupees payable at the end of each year. Lease incremental lessees, incremental borrowing rate is 6%. The asset will be depreciated over 10 years' time. Carrying value of the lease liability immediately before the lease modification, beginning of year 6, end of year 5. Lease obligation was 2,10,000. ROU was 1,84,002 at the end of year 5, beginning of year 6. Now what happens? On or after the 6th year, beginning of year 6, you reduce the scope by 50% to 2,500. Rentals have come down from 50 to 30,000. What happens is a partial reduction in the scope. Correct, sir? I have reduced my lease obligation by 50%. So my obligation now is 1,05,000. 50% of 2,10,000. At the same time, my ROU also will come down by 50%. So 1,84,000 divided by 2 gives me this 92,001. The difference is recognized in the income statement. कहानी यहाँ नहीं खत्म होती. There is still more to it. Then be choice. You have to restate your revised lease obligations of 30,000 over the balance 5 years time. And computer G, let's go there. Reduction. Incidentally, they have not changed the rates, but you can always change the rate if there is no reduction in the term. So rate is same. There is no reduction in the term, change in the scope. अगर 10 का 5 6 होते तो 4 होते, या 10 का 15 होते तो you would have changed the discounting rate. So at the end of year 5, my ROU is 184 and the lease obligation is 2,10,000. So I pass 50%. I have to recognize. I hope you understand. 50% of 2,10,000 is 185 and 50% of 184 is 92,000. I de-recognize these both by 50%. This is producing my profit and loss account, profit of 13,000. But now what has happened, sir? I have plotted this 30,000 rupees for next 5 years time using the same discounting rate because there is no change in the term. So my revised carrying value of the lease obligation is 1,26,000. इजाफा कितना हुआ? By what it has gone up? It was 1,05,000. Okay, it was 1,05,000, and now it has become how much, sir? 120. It has gone by what? It is 1,26,000. Now it is 1,26,000. So 1,26,000 minus 1,05,000. Computer G, what is the difference? So difference is 21,062. So by that amount, my lease obligation will go up, debit ROU set and credit the lease obligation 21,062. So both will go up. A, ROU set, and B, lease obligation. Correct, sir? So my revised carrying value of my this thing will be 126. Okay, by this amount, my now what should be my ROU set, sir? ROU set should be, just a minute, please. It was 92. Okay, it is here, sir. 92,001, but add 21,000. So my revised carrying value of the ROU set is 1,13,000, whereas the revised carrying value of the lease obligation is 126. I'm going to share all these Excel sheets with you, sir. Okay, sir. So ROU will become 1,13,000 restated, and revised lease obligation will be 1,26,000. Now again, there is a second example of increase in the lease rentals, lease term. It was originally for 10 years time, okay, and after the end of year 5, it is again increased by, say, another 7 years or 8 years time. At the end of year 5, so what is important here? Observe the change in the incremental borrowing rate. It was 6%. Now it has gone to 6%, 7%. Now what happens, sir? At the end of year 5 or year 6, at the end of year 6, my carrying value of my the carrying value of my ROU was 2,94,000, whereas my carrying value of the lease obligation was 346. Okay. Now, when I change my, I have not changed my rentals, I have changed the lease term. As a result of which, my revised lease obligation works out to be 5,97,000 rupees, which was how much, sir? Which was 346. All right. So 346 was my carrying value at the end of year 6, beginning year 7, and now the revised carrying value is 597. And the increase is 2,50,000. So the entry is debit ROU set and credit the lease liability by 2,50,000 rupees. This is the impact of the increase in the lease obligation. Lease and deferred tax we have seen, sir. In case of sublease, sir, मैं 2 minute लेता हूं.
Sure.
Can you allow me 2 minutes, please?
Yeah, sure.
Thank you so much. This talking about this sublease. ध्यान से सुनिए. It's going to be little on a fast track. I have taken an asset under lease from Mr. A, and I have right to sublet. So I'm lessee for lease number 1. We call it head lease. I'm lessee and Mr. A is the lessor. Since I got right to sublease, I have given to Mr. B. In that case, there's a sublease. I'm the intermediate lessor and Mr. B is the lessee. So in the first place, I talk about the ROU asset, the lease obligation in my capacity as the lessee. But secondly, then in that case, I'm a lessor. Now I'll talk in terms of finance lease and operating lease. Okay, sir? So in that case, I have to still talk in terms of finance lease and operating lease because I'm a lessor. And we know it very well that lessor accounting is not changed. It's the same finance lease and operating lease. Sir, I know I'm overriding the time. Sublease could be either finance lease or an operating lease. The sublease could be either finance lease or operating lease. Now, if my sublease is considered as a finance lease, then what happens? I being a lessor, I will recognize lease receivables. I will de-recognize the ROU asset which I have passed an entry when I become a party to the lease, and difference I recognize in the lease. So when I was party to the lease number 1, I was lessee. So ROU asset account debit to lease obligations. But when I am a lessor, I de-recognize the underlying asset at 1 lakh rupees and I recognize the lease receivable at 1,12,000 rupees. The difference is recognized as my gain. Friends, for this, I have done a very exhaustive case, which I'm going to share with you in the Excel sheet. What happens if my sublease is considered as an operating lease? I retain my ROU asset. I do not recognize my ROU asset, and that remains still in my books of accounts. Expenses in case of intermediate lease will be depreciation of the ROU asset and interest cost of the lease obligation on the lease number 1, and income is operating lease. But if the sublease is considered as a finance lease, see what happens. Since I have de-recognized the ROU asset, I don't claim depreciation on ROU asset, where the sublease is considered as a finance lease. I recognize finance cost on the head lease. I recognize interest in the sublease. Okay, sir. So this is where I stand, sir. And the second is the terminal, the lease treatment at the time of adopting it for the first time. It is known as the initial application. Either you applied it fully retrospectively or modified. In that case, you change the comparatives right from the date of transition, comparatives, and obviously the current year. In case of option 2, you do the calculation, but you do not restate the comparatives. In case of option 2B, is again, do not restate the comparatives. It's from the year 1. But here, it's very ultra simple. Whatever, you do the calculation retrospectively, but you don't account it for retrospectively. So, dear Mr. Moderator, hello.
Yes.
Can we take the question answer, or you want me to go ahead? I can do one thing. I've done this complete example of this lease calculations, modification of lease and everything, including purchase option example. I'll share with you, friends, everybody. Okay, and I'm going to share my email ID with you so that any questions you can ask me These are many case studies also. Okay, these are my credentials. Please feel free to ask me the question. If not immediately, I'll take 1 or 2 days, but I'll definitely revert to you and that whatever is left out here is being shared with you. I'm going to share this with the ICI also, the Excel sheet and the PPTs. Kshama kijiye dosto, it cannot be completed because as you also know and you have me possibly that is humongous task to complete in 2 hours time. आपके धैर्य के बदल बहुत बहुत शुक्रिया. Thank you so much. Now you
Thank
can
you.
take my dear friends. Yeah.
Thank you, sir, for taking a stab. Maybe like we can address few questions that have been posted by templates. Okay, so the first question is basically in the contract, the supplier has a clause wherein they can replace the asset if it breaks down. So, given that there is this clause, does this qualify as a substantive substitution right that would prevent the arrangement from being classified as a lease?
Yeah.
Or yeah.
Okay. Ghanshyam, I must say something. You know, one of my colleague who is sitting with me has been noting down these questions and taken the printout. So that's fine. But you do read the question? The question is that when the supplier can replace the asset only when it breaks down, does not mean that the supplier is taking away these assets from the lessee for economic benefits. क्या आपको लगता है कि when it is break down he is to get any benefit from the equipment or the underlying asset? Answer is no. That this limitation is only when he takes the underlying asset from the lessee and uses for his own economic purpose for his own business. Then only it is considered to be the breach of the covenants and it is not considered to be the asset which is identified or specified. So to answer your question, it will not prevent the asset from being classified as lease under 116.
Sure. Thank you, sir. So the next question is basically, we lease a large number of individual computer monitors. While each monitor is of low value, they're essential to our operations. Can we still use the low value exemption for this, or must we aggregate them because they're highly integrated with our server system?
In the first place, can you give me the name of the question? The one who is raised the question is a brilliant question. जो प्रश्न करता है उससे मैं मुबारक दे रहा हूं. Very good question. The very good word picked up by you that they are not dependent they are not independent and they are interrelated. If they are highly interrelated or not independent, then despite being the low value otherwise, they are not qualified to be a low value. In that case, an entity cannot claim exemption for the low value and still have to recognize the ROU asset and the lease obligations. प्रश्नकर्ता, अगर आपका नाम घनश्याम भाई को है पता है या किसी को पता है तो मैं आपको मुबारक बना देना चाहता हूं. बहुत बहुत गुड क्वेश्चन.
Unfortunately, as of now, I don't have the name, so yeah, you can thank you. Moving to the next question, we have a contract for 60% of the capacity of a storage tank. Since we don't control the entire physical asset, does this still mean the definition of an identified asset for lease recognition?
Can I be rhetoric in my answer? Meaning, प्रश्न का उत्तर प्रश्न से.
Sure.
So how can you differentiate कि ये टैंक में ऊपला हिस्सा मेरा रहेगा या नीचा हिस्सा मेरा रहेगा या लेफ्ट टैंक का वाटर मैं रहूंगा? वाटर इज फंजिबल. कैन यू सेपरेट द वाटर? कैन यू सेग्रीगेट द वाटर? अगर पानी को कलर भी देंगे तो आप बोलेंगे कि पीला कलर का पानी मिला और ग्रीन कलर का आप डिफरेंशिएट कर सकते हैं अनलेस यू मेक अ पार्टीशन देयर and say that this partition which is 60% belongs to प्रश्नकर्ता और बाकी YMD को या बाकी घनश्याम भाई को है तो चल सकता है. बट स्टोरेज टैंक को अगर आप बाइफर्केट करके कर सकते, सेपरेट कर सकते तो ही कर सकते. अदरवाइज बेस्ड ऑन दिस नम फिगर्स details only you cannot qualify these as an asset identified oblique specified. In this case the lease rentals paid by you must be expensed out.
Got it. So just an extension of this question, sir. At the same time, the subsidiary has a contract for the remaining 40%. So do we identify a lease in our respective standalone financial statement, or
No. This cannot they cannot be extended to the parent subsidiary or even HUF also, right? Means not related parties are never, it's totally out of this thing. You cannot club them together. You may club them for consolidation of accounts, but not for this.
Okay, got it. Okay. So the next question is: we have a 5-year lease with an option to extend for another 5 years. If we aren't reasonably certain to extend at the start, because our business plan keeps on changing and frequently. So when exactly are we required to reassess and update the lease term in our books?
All right. So what I understand, the lease, initial 5-year lease with an extension of another 5 years. So total कितने हुए साहब घनश्याम जी? 10 साल. 10 साल, right? 3 साल के बाद, after 3 years, you change your mind. So initially, when you started this, the lease period was only 5 years. So initially, when you start, your lease term should be 5 years only. You should discount the lease only for 5 years and discount and depreciate the ROE only for 5 years time. At the end of year 3, that means beginning year 4, you are changing your lease terms, right? To 10 years. So at that point of time, at the end of year 3, beginning of year 4, you restate your lease obligations, okay? And then as a result of which, obviously your lease obligation will go up. So entry would be debit ROE asset, credit lease obligation. Use the different discounting rate. Use the, not the same, but a change discounting rate, because there's an increase in the term. Okay. So in other words, your action starts remeasuring the lease obligations at the end of year 3, beginning year 4.
Got it. So the next question is: if we expand our existing office space mid-contract and the rent for the new space is at a market rate, so do we have to remeasure the original lease, or can we treat the additional space as a completely separate new lease?
So पहली बात मैंने बहुत अहम सेंटेंस कहा था कि these all are changes in an estimate. So always account them prospectively, never retrospectively. Okay. So मुड़ के ना देख, no retrospective accounting, only prospective. Now let's read. Expand our office space mid contract and the rent for the new is at a market rate. So it is a stand-alone price. Correct? And again, it was not part of the original contract. So it is to be treated as a separate lease, not modification of existing lease. Existing lease को जरा भी touch मत कीजिए. Start a lease. For example, that was lease number 1. You say it is lease number 2.
Okay. Got it. Moving to next question. If a lessor agrees to reimburse us for real estate commission costs as an incentive to sign the lease, how should this reimbursement impact the initial measurement of our right of use, ROU, asset and lease?
I have given the example. In that case, in my example, the lease incentive was rupees 4 lakhs. And at that point of time, the accounting treatment of this is to reduce from the original amount. Where is this transaction? Can you see this on the Excel sheet, sir? Hello?
Yeah.
So the lease incentive of rupees 5 lakhs is reduced from your initial cost of measurement. So then in a nutshell, this will not impact your lease obligations, but this will impact your ROU assets initial measurement. While calculating the lease obligations, lease incentive is not recognized unless you reduce from the initial state, but ideally it is reduced from the carrying amount of the initial measurement, like this reduction from the ROU set.
Got it. So just one last question. I know we are slightly approaching towards the time. So if we decrease our leased office space by 40% mid-term, Ind AS 116 requires us to decrease the carrying amount of the RAU asset to reflect the partial termination. So does this result in an immediate gain or loss in the P&L, or it's just a balance sheet adjustment?
मेरे मित्र बिल्कुल आपके सामने है ये. केवल इतना ही फर्क है. यहाँ पे it is 50%, whereas you have given me
40%.
40%. So the carrying value at the date of reduction of the lease obligation you have to take into account and reduce it by 60% in your case, and by that amount you restate your carrying amount of the lease obligations and the lease liability, and the difference is recognized in the P&L account, either debit or credit.
Got it. Thank you so much, sir, for handling the questions patiently. So,
प्रश्नों में मेरे टॉनिक्स रहते जनाब.
Okay. With this, I would like to place on record my sincere gratitude to our esteemed speaker for sharing valuable insights and for addressing the topic with such depth and clarity. I also extend my heartfelt thanks to the chairman and vice chairman of the Accounting Standards Board for their guidance and leadership in conceptualizing and launching the Legacy Leadership webinar series, enabling meaningful knowledge sharing for the benefit of our members and stakeholders. Last but certainly not the least, I sincerely thank all our participants for their active presence and engagement throughout the session. Your involvement is what gives purpose and relevance to these initiatives. Once again, thank you for all the continued support and for being part of ASB's ongoing efforts to promote learning and thoughtful leadership in the field of financial reporting.
घनश्याम, 2 शब्द बोलने की इजाजत मिलेगी?
Sure, sir.
Again, I'm thankful to ASB chairman, vice chairman, ASB team for arranging this kind of series, and this is really helping a lot to all participants. And I'm also thanking all participants for taking active part in raising questions. I'm assuring you once again that this PPT and the Excel sheet, maybe with, and all Excel sheet will be linked with the PPT. For example, as you can see, scope reduction, slide number 36, load reduction increase, slide number 27, this slide 26, like that. I will share this Excel sheet with you all through the ICI and PPT's booth. Thank you, Rahul Bhai, and I appreciate you contacted me early morning, 10 o'clock, just to see that सब सही सलामत है कि नहीं, right, sir?
Thank you so much, sir.
Yeah. Thanks.
Thank you.
Thank you.